Okay. Hey guys, it's another week, another exciting week in the markets. This is a been a pretty. Today's been a very up and down day with a very wide range. So here's the chart. I've been working with it more and more every day to help with the trading. I've been more concentrated on trading this week than doing some development work, but we did get some things done this week that I'm glad to say is it getting the move on the theta portfolio management, because the trade here I'm still working with it. We're still collecting data. Some of the issues that I had this week, I've noticed. You can see here right now that the market's been closed about 30 minutes, and Schwab is still 11 minutes behind on its data feed. And I've had some issues with Schwab. It's like stopped processing data at times, at least earlier in the week, and it's forced me to do some resteps. I think we lost 4 or 5 hours of Schwab data because I thought it was just behind, but it wasn't behind. It was actually not processing. So I'm not sure what's going on, but I saw a lot of weird things with all the platforms that I currently work with and trade on. That Monday was not a good day overall. There was some high volatility related to the events that happened over the weekend in Iran, and because of that, I think the markets were a little bit jittery. But I noticed that banking systems were having issues, and there just seemed to be a lot of just very slowness in the systems all around. So I'm not sure what that was, but I did lose data this week. So we'll see. When it's really volatile, it's very some of the stuff that we're looking at for trading. It's you just can't trade volatility, and with this stuff that we're looking at, you can't even anticipate how things are going to react. And you can see, like today, some of the new stuff I've added recently with the bubbles. These are trapped sellers, and then I turn around, I've got trapped buyers, and then we had a large buying volume right here. But apparently there was a lot of sellers to overcome the volume, and it kept falling. So I'm trying to scale the volume. ATR is now at 15. It was north of 80 or 90. It was at points today, and even at this point here is probably expanding out. So it's a very difficult trading environment, and when it gets this volatile, you go really small, and if you get a gain off of your day trade stuff, you kind of lock it in and say, let's just kind of wait it out. So I did have to start making adjustments on my portfolio. We'll go through that today too. We'll kind of walk through the mechanisms of what I'm doing right now, and maybe I will get to a point where I can automate some of the stuff, or it becomes more real time instead of me pushing buttons. I don't have live data right now. We're just downloading, making changes, then I can run a command and retrieve the latest from my accounts and get the current balances and stuff where you know what your exposure is. And the exposure has gone up, but it's in the stage where it's not a good place to be, but it's not a bad place to be. We don't owe any money, but if anything gets assigned, we'll have to start liquidating positions. And I don't know what's going to happen this weekend, because that's some of the unknowns. Okay, so we've dropped from 11 minutes behind to 7 minutes, so it's starting to catch up. As volume drops, the data feed's catching up. Tasty pretty much keeps up. Sometimes it'll get a minute or two behind, but it catches up really quickly. It's only when we get these spikes that it falls behind. So I've been leaning more of keeping the Tasty feed on for everything. And if I go through the day, you can see we've got lots of sell gaps, unbalanced sells that we've left behind. And At one point today, I thought we were going to totally reverse everything, but then, let's see, where were we? Let's go. Let me pull back and kind of scrunch the data up since we've had such a wide range. Yeah. Okay, so this is the overnight. The overnight we drifted down with like a 1% loss in the market. And then the market opened up and dropped down immediately. And we went into really, really oversold. And it's about here that it was like, if it starts going any farther, we're just going to start melting down. And that's when we had a big, strong buying pressure. And you can see that we've created some buying imbalances. You know, I think I made the majority of my money coming up here. I was trying out some new things, and I was only trading like a couple of MQs, and I pulled in, you know, like $500 for the day off of that. But I'm trying out some new tools. But with this, I can see the bubbles coming in. It's like we have trap buyers or trap sellers. And we get a trap seller on a green candle. Let's see if I can zoom in. No, we've gotten here. When we start getting trap sellers, it seems to, when the sellers get trapped, they start liquidating, and you just start pushing, and it just pushes. And then we had more sellers because they thought, you know, because as we got up to the opening range, so this is the first two. So it's like the first 4 minutes of the market open. When we got to here, looks like we had more sellers coming in. You can see all the sell bubbles. And it plunged and then go up and go up. And then we started trending sideways here. And some of the new tools I'm kind of looking at for real life trading. This platform right now is not built for live ticks because I'm not paying for a live tick feed, but on the trading platforms you get that live tick, and I've been monitoring that. Since we've been doing all this work, I have a better understanding of the ticks and what I'm approximating. And the approximation's good enough because the signals I'm generating up here, I'm seeing it showing up. So like this contested area, this is where we started flattening out, and you could see it on a live tick feed. And when you're looking at, I was looking at time and sales, so you can see the orders that are coming in there, actual field orders. So this is kind of the data I'm actually using at an aggregated level, but I'm seeing it here for, you know, I was keeping track of like every order and every orders that were above a volume of 10 being transacted, or 20. I think I had to bump it up to 20 at this point because it was still just too much coming in, you know, and it wasn't clear. And once you put it up above 20, then you started seeing the hundreds of contracts that are closing out. And with that, you can see, was it absorbed selling, or outright buying, or outright. Yeah, outright selling or outright buying of contracts. And when I saw it flattening out, and then it's like, okay, so if I see a break, I'm just going to sell into that break, you know, as we start expanding volatility again, because it got really contracted. So some of the tools I was looking at, it has standard deviation lines, and it is you only look at like the past 100 candles of these ticks, and I was running 150 ticks, and that just means every 150 contracts you create a new candle. And we're flying along, so I could see in real time the compression of the deviations. And then once I started seeing movement in a direction, you know, you'd sell or buy in that direction, and you get a quick move. And I was only looking to maybe nab 10, 20 points because I was looking at ATR, and ATR's, you know, hitting 80 at here at on the 2-minute candle. And when it's that wide, I just picked, you know, it's like if I get a quarter of that move, and you got that quarter of a move in like a couple of seconds. And so I was able to add on. So that's kind of the tools we've been developing, and this kind of helps because I can keep track of ATR. I can see where these imbalances are forming. And when you see an imbalance, you can expect, as I learn, I'm going to have to start doing some analysis on these bubbles to see when it forms on this part of the candle, what should I expect on the next candle, odds-wise. I mean, we'll try to keep that in mind of what to expect, because I am kind of looking back on this, but it's more of a confirmation as we start, if I'm moving away, if I start coming back into that area, what can I expect for reactions? And that's what we'll do the analysis on. So you can see there's a lot of bubbles because there was a lot of volume today, and it jumped around. It's like, so here was the steep V retrace and going above, and you can see like it hit the overnight high and bounced. It hit it, came back down, tried once more, came back down, and when that came back down, it came back down, a couple hundred points. And then we finally did break the overnight high around during the lunch hour, but then the session value area high, you kept on bouncing across, and we finally did break, but then in the afternoon it started falling again after the lunch hour is over, and we start getting into the power hour, and these falls left imbalanced sell gaps on it. So that's something that we'll have to tackle over next week to break through on. So that's kind of a summary of today, and this is the chart and the tools. There's a lot of stuff. I didn't trade a lot of these signals because it was just too volatile in movements. And you can see that these little circles show where we started contesting some of the imbalances, and though there are imbalances, we still have buying imbalances down below, selling imbalances above, and the market's just kind of flattening out. And this was OPEX too, on top of everything. So, from an OPEX standpoint, I think we're back in the range. I didn't look what the max pain, but the way things started moving, you could tell that we were just going to balance within this range and keep it inside based on it. We weren't going back to the lows or the highs. Okay, so that's the chart. That's kind of how I'm using it now. No major changes this week. Last week I added the bubbles, and I'm just kind of working out to see how the bubbles are working and collecting data, and we'll start doing analysis on the bubbles. I was trying out some new day trading stuff, and so the focus is not quite as much. I did do some programming, and we'll jump into the dashboard here that we created this week. So this is the dashboard. I can actually go into edit mode, and we can actually collapse these down, and I can move them around. Oops. I may have to reload. Let's reload the page. I haven't worked out all the kinks on this yet. Okay, so I think it keeps its memory of how big it is, and there's no place to move this down. But these, you can actually move them around. And right now it's sort of like playing the game of like you have the missing square and you're trying to make a picture out of it, and I can collapse these down and move them around. So now, let's see if I collapse this. Now that's collapsed. I can't. Okay, I can move here. I can't move there. So this is stuff we've got to debug. It's just, this is the first pass. And I loaded in basically almost year to date. I haven't put in the trades that I made today, but most of the trades I made today, I didn't open up any new positions. It's really just managing positions and rolling for credits. It's the stuff that what this is built for, to help keep track of managing everything. So I think my liquidating value, I think we've dropped $500 or $600 this week. See the cash is higher than the net lick. So that tells me, I've got underwater positions on the or in the money options. So because we had a down week, and today was a big down day. I think, yeah. So if I refresh the dashboard, I may get updated numbers here. Okay, I guess I'd already refreshed it. So as you can see, if this open P&L is not correct, this open P&L is not taking in the value of the stock, or if since we're not pulling in live information, it's just looking at historical, and at a historical basis, since I was assigned some stock, it's got what I paid out for the stock, and so that's pulled it into a negative. But if we look at the closed positions of the options that we've sold this year, we're at a positive, and we're sitting at nearly 10%. So we're halfway through the year, and the goal is to get at least 10% a year. That's the target, for a conservative target for the Theta portfolio. I think in almost any kind of market condition, we can squeeze out 10% during the year. Okay, so this is kind of a capital summary. So we record what the initial outlay of capital is, and I had to kind of guess, since we're pulling back from history, but roughly you can say it's 20% because it's a Reg T account. So I have initial capital is 10,000. My maintenance is 16,000 now, because stuff has gone into the money. And so part of Reg T is, once you go in the money, you go from 20% required to 40% required. And I want to use 40% of the portfolio. Currently we're at 88 because things went in the money. And so when a couple of items, I think I have nearly half the positions are in the money right now, just based on the moves. But we're not to that point where I am worried about any of these positions, because at the end of the day I can close it out, and this will drop down, and we may suffer some losses, but they're not big losses. It may cut our earnings down in half, but I'm not too worried about it at this point. And based on the closed campaigns, we've had 15 winners, 2 losses. So it's a high win rate, and I'm selling between 20 and 30% delta. So 20 and 30 delta, and you can see what our gains are. We've had 4,000, but on the losses we've lost 2,000, because when the Gulf War broke out, I had to immediately close some positions, because I knew, based on how things were going, that those positions were not going to recover. So we had to absorb those losses really quick, and so we've been having to fight back, and I've been managing some positions since we've gone into that, because I figured I can manage them, because the implied volatility on the underlyings are high enough that I can manage them, and I can generate the kind of returns I was wanting to generate to begin with, and we'll see if the stock price recovers or not. Okay, this profit factor, this is capital turnover, and this is something you have basically a monthly target of capital that you want to turn over every month, and as you keep progressing through the year, this number will keep climbing. And no, okay, Now this is just a simple ratio of the P&L, the gains and the losses. So I'm nearly a 2-to-1 on the wins versus the losses. So this is not bad. Here's a monthly activity performance. This is kind of keeping track of stats on a month-by-month basis so you can keep track. And in March, since I didn't really make trades after initial breakout because it's like I'm already in positions and it's basically managed and maintained, so nothing new was created. We had one new trade, or I closed out a trade in April. It was opened in February, so it means I rolled it and actually was able to close it out. Because your average return on capital is usually 3 to 5%, 2 to 5%, 1 to 5%. So seeing the return in the average days was 98. So I held it 3 months, but got a 10% return on it. So if you do that 3 times, it's a 30% return on your capital. And if I'm keeping 40% in on average, this is where you kind of do the math to help you with managing a theta portfolio. So these are just dashboard things I used to have in a spreadsheet that I had to manually calculate, and now we've turned these all into dashboard components that takes the information, what's being stored from the trades. So there's a lot less work to be done. Okay, so this is kind of a back of a napkin estimate. Basically, I take what I've done year to date and then project it out for the remainder of the year. And our average days is long because I've had a lot of positions I've had to challenge, and so that this will keep growing until we close out those challenged positions. It's like they're still generating credits, and so the credits are basically on positions either stock I've taken ownership and it's under, and it's below its cost, and I'm selling calls against it, or I'm rolling puts, and so once I have a position, I don't close that position until I close out the position totally, and at that point I'd recognize the loss, even though on a tax basis, the losses I incurred in December or in last year's taxes, and then as I keep rolling these, if they go profitable, then I will be taking a larger profit than what will be shown here when I look at the position overall, because I think some of these positions, I know HIMS, I got assigned back in October last year, but HIMS, the stock itself, is at a loss, so that's net not been realized. But I've been selling calls, and I've had to roll a call because HIMS actually increased in value faster than I thought it would. But it's been pulling back, and so the call's fine. And I may have to start rolling the call up just to gain back an overall value of the portfolio. But we'll look at some of these as we go through here. So I predominantly sell naked puts. These really are less risky than doing defined. We'll go through some defined trades that I've made this week just to go through. I've had a short strangle. I've got a trade somewhere that's unclassified, so I don't have to go through and look at it and get it classified. I've had some put credit spreads, and I've got a poor man's covered call. And I think this is morphed. No, this is the TLT trade. So I had a TLT trade that I started last summer for doing as a poor man's covered call. And I think that's what we closed out. So that would have been this closeout in April. So I think the covered call expired around April. And so we made 10%. It was not as much as I was wanting out of it. But the poor man's covered call, it's an interesting trade. And there's a lot that goes into it. And it's not always profitable. People want to say it's profitable, and it's profitable under certain circumstances. And TLT, I thought, would be a good trade to run the poor man's covered call on, but interest rates did not go the way I thought. And there's so many undercurrents with all the changes that have happened this year that we still don't know which way interest rates are going to go. Because this time last year, it was like beyond a shadow of a doubt, interest rates are going to start coming down. That they lowered it a couple of times, but then stopped. And so when interest rates go down, TLT value goes up. And that's why you're doing this poor man's covered call, because I'm making an investment in a call. I'm buying a call way out in the future at a lower price. And then that becomes my capital base. And then I'm selling calls against it regularly. And when I was looking at it, the optimum sell date was around 10 days, because you basically do a quick straight line decay of that covered call that you have, and you hope that the price of the covered call doesn't go below its strike price, because then you'll lose the value of the premium, or the value that you were kind of paying at a discounted level. So if you bought $5 below current price, you have $500 discounted by time, plus theta and all that. And you do a straight line. You run it like it's going to run to zero. And I wish I'd come back with like $500. You hope that you get the $500, because you don't want a price decline. But if it does, you make the assumption it's going to go to zero. And what do I have to sell, and how often do I have to sell to make sure that I at least break even? We did make 10%, but at 10%, we were in the trade for 6 months, and so it's not really. We're in the trade over 6 months, I think. So even though I had a 10% return, it's not a target return that I would want on the covered call. It needs to be a lot higher to make up for that time component, because if I'm looking at turning my capital over, I turn my capital over basically at maybe 2 times a year. That does get you up to your 20% target. I met my minimum target of 10% a year on this piece, but I'd really want it closer to 20, because we're not 100% invested, because it's a margin account. You want to be 40% invested of your capital at all times, and you want to turn it over. That's the name of that's part of the equation of a theta portfolio. Is how quick are you turning your capital over every month? That's one of the cons on the poor man's covered call. It may return better than owning the stock outright, because owning the stock outright, that would have been, it was trading about 90 back last summer. So that would have been $4,500 in a margin account if I bought the stock outright. I only had to put $1,700 up, or actually, it was basically the price of the call was around $1,700. It was a series of calls. I could do multiple calls, at $500-$600 each, and they came up to about $1,700 total. So it's a long-winded thing going over poor man's covered call. Okay, so undefined versus defined risk. I've got one uncategorized. I'm going to have to go look and find which trade that is and get it correctly categorized. So undefined risk, that's the nakeds, or the short strangle. I think it's 12 and 13. And this is basically return on capital. This is how much capital I used on these trades. Defined risk, we can go into, it's like the credit spreads. And you do that at times with stuff that I don't want to take in the full risk, or the stock price is too high. So I try to limit my naked puts on underlyings that are usually $100 or less. Because if you look at, because I only have like $18,000 in this account, and $100 stock runs you about $2,000 of capital that you're using. So that right there, you're at 5% of the portfolio. Oh no, you're at nearly 10%. So you're one option, $100 stock, you're already at 10%. And I try to keep it at 5%, but I like some of the stocks that I'm doing that, they've got a good history. They're not too volatile in the moves. They've been volatile this year, that's for sure. But I know it kind of has a floor in value, and due to the size of the company, it doesn't have the ceiling, but I'm only selling puts on it. So I know it has a kind of a floor, and so I could see losing half the value in taking assignment. But that's the risk I'm willing to take on that trade. Okay, this is like the open positions. We'll go in details. So I have EQT, which is challenged, it's underwater. HIMS, I've been assigned. Intel, I've got a couple of Intel puts. And then XYZ, which is Square. And last week I think I had two, but we let one expire. We didn't roll because we were really pushing how much requirements, and then I think this one expires today, so that one's going to roll off today. So that's why even though I was at 80%, I know capital is freeing up because options are expiring, worthless, and so that capital will be freed up, and so this is going to drop down closer to my target. And so I'm less worried about whatever happens next week. Okay, so let's walk through. I think I have, yeah. So, okay, so we're going to import the latest. So I should have trades from maybe yesterday's expiration and today's trades that we made as we made some adjustments. Basically, just roll out in time and collect credits. Eventually, I will have this running in the background just to periodically poll to where when I come in and want to do my maintenance for the day, they're already sitting there. But we're in development mode right now. Okay. Okay, so if I click on this order, then over to the right, my the current open positions, I've got two of them. And I can look at the dates. So we rolled the 24th to the 31st. So it's really this one, because the last transaction here is to the 24th. So the put expired on. I've been doing weekly rolls or weekly sellings of Intel, and it was trading at like $130 2 weeks ago, and so I was selling not quite 20 delta. I think we're down to maybe 15, but the IV is high, so I went out because I'm willing to collect, basically $100 just for that few extra dollars of buffer, because it was paying out high enough, and the capital requirements on Intel was at the 20% or even a little less than 20%. Yeah, because I think my capital requirements was like $1,000 on this. Yeah, so because Intel is a very stable company, so Reg T gives guidelines, but then it's up to the broker, and in this case it's Tasty, and they use Apex, and Apex does all the risk management, and Apex says, well, it's Intel stock. Even though IVR or the IV on it's high right now, historically, it's a stable company. It's not going to go bankrupt. There's a lot of factors, and so they say you don't have to hold the 20%. You can hold the 15% or less. And so that's what that's what it was, and so that's why I could sell stuff at $1.40, and be fine. And then last week or earlier this week, I rolled and collected like $300 or $400. So I banked in it, and at that point, I think there were 110 puts that I rolled down. Yeah, we can look here. So it was a 111 put. I rolled it to 110. I just took $1 off on the 7th, so last week, because it's already starting to get challenged, and I felt, okay, let's just roll it out because I don't know if we're going to expire. And so I just rolled it out a few days. So we rolled it from the 17th to the 20th, so I rolled it out a week. And so this week I rolled it out another week. And we're hitting earnings too. And so I don't like holding them through earnings, but I think there's half a chance that Intel will surprise on earnings, because demand overall on all semiconductors is so wide now that it's just, are they starting to build buffer, and they will have a full pipeline and Intel hasn't had a full pipeline in years. They've been meeting their demand in their manufacturing because they've fallen behind, but some of the stuff that you need for all this AI build out, that's where Intel excels. And so as everything's getting oversubscribed, Intel has just been going along for the ride, and plus they're working on a new technology that's different than what ASML does. And so that's why you're in it. That's why the IV is high. So it's maybe a big risk, or big risk, big reward. And so we're just in it, because the technology they're working with, they won't have anything coming out being used by it for another couple of years. Okay, so we'll go through the mechanics here. So I've selected these trades, and I want to add it to this. So I'm going to add to an existing position. So you click on this to where it's selected. If I click here, that becomes selected. If I click here, that becomes selected. Okay, so we add it to an existing position. And this is just a double check that you're adding it to. I could change the name of the campaign on another form. I'm not mixing underlines, but we're making this very flexible that I could select multiple stock. Say I am we're selling one stock, but then I want to hedge it, but I don't want to hedge by buying that stock because my risk is that stock, and I want to hedge that risk with SPY. And so if I want to hedge like 10 delta, then you'd buy 10 deltas worth of SPY for Intel. And so that would be like maybe 2 shares of SPY. So then you could mix your two stocks to see what your hedged position is overall and keep track of it versus something else, because the brokerage platform's not going to be able to do that. And that's one of the things that the Theta portfolio will be able to manage, is that if you hedge and you want to hedge in a different underlying, and the most common, that's why all the day trading stuff, when you're trading futures and stuff, it's like, why are the futures moving so much and going up and down? It's because all these underlyings and people hedging off. That's why you don't see a lot of really runaway days. It's been probably 2 years since we've had just a solid trending day. Things have changed, but one of the things is that it never falls as far as you think it's going to go, and it never goes up as high as you think it's going to go. It's because people start hedging, and one of the things that they're hedging is that they may be buying one thing or selling one thing, but then they're also offsetting some of that by hedging it. And you'll be able to track that with this. So that's one of the cool things I'm working on with this. Okay, so we're going to look at the next Intel order. It's another roll. I rolled it for $62. These were basically, I dropped it from 108 to 105. Still collected basically nearly 70 cents on the roll, and was able to roll it down because that's just how high IV has been this week, that I could roll the stock, roll this point down and cover up $300 and still collect, and still collect a credit for the day. So this is the buy to close the 27th to the 14th. Okay, expires 27th, and we roll that out to the 14th, so it's this one. So we add it to the existing position. Okay, so this is I did a 0-day DTE yesterday. Buy to open, sell to open. Okay, so which one is this? 80, 75. So this is the $500 one. So we're going to create a new position for NDX. That was yesterday. And then I did an overnight because I didn't think the market was going to drop as much as it did today. And so we're going to create a new position here. So this was $1,000 of coverage. I'm collecting 127. So you're looking at like a 10% return in one day. But with defined risk, you can run into issues if the positions get challenged. If it blows through the price, you basically go to full loss. I'd lose $900 on this. Create new position. So we're creating a new position. And so if I scroll down the list, I've got all the open positions and all the transactions. I think one of the features is that with these challenges ones, I'm going to have a collapse button where I collapse the details to when I have to see it. Because you can see this one. This is a EQT. I opened up in May, and it looks like we got challenged. It's that week after I opened it, and so we've been rolling it since then. And so I've got $600 in credit on this one. So NDX. Okay, so this is the assignment for an expiration. So you had a put and buying the put and selling the put. So this is this one. Nope, it's this one down here. Okay. So yesterday I sold this for basically 60 cents on 500, and that expired worthless, so we'll add that to the existing position. So this is the basically the closeout, and then today we had to roll EQT out. I think I have them all merged. I had basically two sets of puts. One's a $55 and one's a $56. And I was tracking them separately, but I've been close. As we keep having to roll this out, I may run into a point. I know I knew it's possible that I could run into a point where I can only roll into like the 55, because if you roll out too far in time, the available contracts may not be there, and we're running into earnings. I think earnings reports tomorrow, and there's a dividend disbursement, and you want to make sure you have enough extrinsic value built up into the option to where you don't get the early assignment. And so the way you do that, you fight that through extending time and see if you can roll up and down. I've got basically, if it's, I think it's two, I have to go to the actual position, count up how many contracts. I think there's 3 total. Yeah, 1 at 55 and 2 at 56. So I've got 3 contracts, so I've got $2 of leeway, or I can pick one of them and apply and roll it down $5. But I'm kind of waiting on earnings to see what happens on this one. So we're going to click EQT. We're going to add the position there, and then today I went ahead and set up a close order with the way the market was moving around. It did go fully in the money, and so I was at max loss, but then we had that turnaround. So within the first half hour of the market being open, this was at max loss, and then it turned around. And once we started just playing high, it was like maybe 200 points above the prices here. You never know, but I knew I had time on my side for the decay. As long as it stayed up in that area, about 200 points to 100 points, then I would probably meet it. And so let's look at the fall off. This is not NDX, but we didn't get back down into this area. So since we didn't get down into this area, my NDX position was pretty much safe, and I could have ridden it all the way to expiration, but I didn't want to risk it. So I felt that I could live with losing 15 cents. Yeah, so out of that $127, I took 115 roughly. So we're going to add that to the position. Okay. Okay, and it looks like I got paid interest on the credit balance. This is something I've got to do stand up. I got to do a bug fix, because this is supposed to go into the cash and not show up as a unprocessed transaction, because it's supposed to just automatically go into the cash ledger. Okay, so now we're going to go to the position summary. I haven't, since we opened up these positions, so these were put credit spreads. This one's a put credit spread. So it's defined, whoops, yeah, it's defined risk, not an earnings play, not an earnings play. This is data that we're building to where you get your stats. You know, this is part of when you open up the position. Okay, I'm going to just select it. Suggested, so that's $1,000, and this is the 500. So what we've done, I can take the suggested. So I've given it some basic rules for estimating the initial capital, or we since I defined this as a put credit spread, then it knows to take the spread difference and determine what the capital is for it. Because, you know, I haven't written any lines of code, and I found it was easier if I tell it what kind of strategy it is, that it can easily more determine what the estimated capital was. It could write the code for that. Okay. For these 0 DTE trades, I like putting the close date the next day, so it's always held for one day, because if you hold it for what it is, less than a day, it starts really messing up with the calculations. So well, this one closed today, so our return was $111, so that's 11% return on capital for one day. That will help on my stats, having some one-day trades. These, this is what's so addicting about the 0 DTEs. And I know some people like to do nothing but. I just do them occasionally, and I may have picked the wrong week to start doing them, because both of these got challenged, but the close or the date, somewhere in the day, we had to turn around to make it safe. That's one of the risks with defined risk trades, is that if they do get challenged, if you don't immediately roll before they get challenged, the only thing you can do is roll it out a day or 2 days or 3 days or a week, and then hope that the market moves and you collect some more premium, so your loss isn't as bad. That's all it does. And that's why over the long run, these things, if you do these consistently every day, you may run into losing money with these. I just do them periodically when I think the conditions are right. I thought the conditions were right because it'd been kind of a slow week, and of course the day I start making the trades, that's when things start kicking off in the Gulf again. Okay, so let's close this one. And instead of the 16th, I'm actually going to adjust the date to the 17th on this. Okay, so that's a bug. So I'm not going to close this out yet. So that's a bug. I should be able to overwrite my close date on this, because this will mess up calculations, because I end up with 0 days, and then when you divide things by 0, you get infinity, and you can't have infinity, and you don't want anything partially close to 0, because then your returns become infinite too. So I will I've got to do some, that's going to be a bug fix that we'll work on this weekend, so we won't close that out. And I believe this one's going to close out, but I got to have the transactions. The transactions for puts expiring will show up either late tomorrow or Sunday, because Tasty's, when you hit the weekend with Tasty, it's a little delayed in what it does. Okay, and I thought I had done a HIMS trade, but maybe I'd already put it in. We can go view the details on HIMS. So HIMS, when I sold the initial puts, it was probably $500. I think I went ahead and gave it the stock price. So the stock's risen since I've started putting these trades in, and I've collected $1,000 in net options, so that's $10. I think the original assignment value, let's see if I can find the assignment. Yeah, my assignment value is 52. So the value is really 42, and I think the stock is trading in the low 30s, so I'm still like $10 behind, but it's got a high IV. And so over the past, I didn't sell this for months thinking I was too low, but the IV has really picked up in it. Now we've been selling. Okay, so yeah, at the beginning of the year, when the Gulf War broke out, I kind of stopped managing this account because I was more focused on some of the day trading stuff I've been doing, and then started programming. And so I kind of let this account kind of sit, because I knew I was hoping the stock would recover in price, which it didn't. But since April, we've collected probably $500 in premium. And this is where since I don't have live updates, I can't say if I sold the stock to see what my loss is. But right now, I think the loss is like $1,000 and not this $4,000. That we're looking at. So this is just how you can go through and manage your positions. And this is where I could select multiple and merge them together if I need to. And right now, everything's already pre-merged because I just went ahead and, like EQT, since I was billing it, and I know I just want to look at it as a single position, even though I've got multiple options open. It was easier just to add them all into a single position to begin with, but I should have the ability to roll or merge multiple things into each other. Then all the accounting will merge into it, and you keep track. Because like Intel, I may eventually merge those if we don't get a price stabilization, because it lost another $4. It's down in the 90s now, so I'm at a $10 gap, but I know I can easily roll and keep rolling for a significant amount of premium every week, just because of the volatility in there. So I can still collect $1 a week. So even though it may have gone down, it's done this several times. So I'm not too worried about the price. We'll see how earnings play out next week. I think it's next week for them. That's why I did the rolls out a little bit further in time, because it's still trying to take advantage of the elevated level of premium that's being offered, because earnings is coming up, and usually that 30-day window is all elevated. And so if worse comes to worse, I'm buying more time just to let things kind of work out if it's a bad, and if it goes positive my direction, then I'm sitting on a lot of premium that I've collected on these. And see, you can look. So on this position alone, in 3 weeks, I'm averaging about $200 a week right now, and that's with rolling down. So we started at like 110 or 111, and we're down to what? Oh, this is not. This is some of the stuff I've got to get the strike price in on the details. Okay, yeah, so we've rolled it from 110. So I've rolled it down $5, and we've still collected 600 so far. So it's looking good, even though it's in the money. So I'm having to put more capital into it, and that's one of the things we're going to have to. As I get the live stream in, we'll get updates that whatever my high water mark is for capital required, that will be what we do the calculation for return on capital. So the initial reserve is 2,000 here, and it should be up above 4 if I go look at Intel right now. Yeah, it's at like 4,500 per position. So the initial capital reserve is doubled. So instead of a 10% return or 20% return, it's cut in half. But it's still a decent return too overall, because we're still rolling for credits, and they're decent credits, so it's still growing. Okay, so that's kind of where I sit. I think. Let me pull up the dashboard. So one of the things I'm going to add is a graph of the positions that were open this year and closed. And like open positions should be at $0, so it's neither a gain or loss. And we'll get the traditional theta portfolio graph where it slopes up and to the right. It's just that there will be some dips because I had to do some closes for losers, but you'll see that even when that happens, you still keep a good, strong trending graph, and as the year wears out, it comes up. So I'd say I closed out a couple. Let's refresh the dashboard. Okay, so things have changed. Okay, let's see if my days fell. Days have fallen for July, from 20 to 5. So we've maybe hit peak days outstanding as long as I could keep rolling. Some trades. Average return on capital is 6.2%. So we went from 58 days to 48 days. I've only got 198 days of activity, so that's year to date. So we're nearly to day 200, I guess, unless it's picking up days from somewhere else. This is things I have to hunt down. So we have 160. Yeah, okay, yeah. So we are near day 200, and we've got 167 days left in the year. And projected, we're near our target goal of a minimum of 10%. So we're going in the right direction. We've turned our capital over 3 times for the year. And if I can sneak in a few more 0-day DTEs, that should bring it in. And if things stabilize, we'll see how the next few weeks. I think this weekend might be a turning point weekend, or something may be happening this weekend or next weekend. Okay, so that's kind of where we are for the week. I know I went more into trades and the mechanics of this and what we're going to do. So the thing is that the goal is to get this to start automating and using live data to feed in. I want to add a chart to show the earnings, and this is just the first stab at the dashboard and seeing what I can do. Like I want to cut down the dead space and get this tighter. And this one off of my spreadsheet is like 3 or 4 different things. I had 3. It's a good summary. This is just the your monthly activity to see, to where you can get a good look at what you're doing. The return on capital is really high. I think these were because they were long trades that I finally closed out. Yeah, so these were I think some more of those poor man cover calls. So you're getting a high return, but then the number of days is really high, and I want to get the days. The days should be like 21 or lower. If things are going right, and we're in a smooth sailing, the days should be like 21 or lower, because you're selling at 45, buying back at 21. And I guess some of the other features is that I want to look at is when you open those positions and you're moving you're selling the 45 and the plan's to buy it back at 21 at 50% profit. If you hit 50% before then, automatically close it out. If you get so far ahead in time, like a week ahead of schedule, maybe you think about closing it out at that point, because what's happened is that the stock's gone in the direction that you want it to go, and the option has fallen in value faster than what you had bought into when you sold it. And if you're in a momentum play on a stock that's starting to move, it won't hurt to close out your existing position, open up a new one at 30 delta, and get that 30 to 10 delta move again and close it out. And then after that, you got to make a decision, because does the stock stall out or not? It's like like Intel right now. It does these moves, and it may move fast for a week or 2, you want to sell and sell and sell, and then once it gets to a point, you let it hit your target and you close out, and then you may want to wait on that stock and look for something else. It's just, everything's different. Okay, so I think we will call that a week, and we'll talk to you next week. We'll see what trades I've had to do for the Theta portfolio, because you can watch as I manage it with this new tool. And my current usage says it's 100%. I don't think we're at 100%. But we'll look. I think I have some stuff expiring, so it may have been higher just because I had the $1,000. Those 0 DTEs, I bumped it up, but I knew it was for like a day, and it's not requiring me to have cash used, because like our cash account's gone up $600. So I rolled a bunch of stuff today and collected more cash. So in theory, it shouldn't have gone down, but I think with Intel falling some more, it's starting to eat up the requirements. We want to have some stuff fall off. So we're not in danger territory. We're just in the be very cautious territory. If you have to, you react quickly and close it out before it becomes a dangerous proposition or you're getting assigned. Okay, so I will close it out for the week. All right, see y'all next week.